Hello guys, Dividend Enjoyer here, and today I'm going to be doing a discounted cash flow evaluation and just overall valuation of Adobe based on what I think is the correct amount you should be paying for this stock, whether I think it's overvalued and undervalued. And before we get into this video, I just want to say two things. For one, I'm not a financial advisor, and this is not financial advice. And for two, if you enjoy the video, please subscribe to the channel, please leave a like, and please check out my other stock analysis videos. So without further ado, let's get into the video. So Adobe Inc., ticker symbol ADBE, currently trades for $419.58. Over the past year, it is down 28.42%. The market cap is 184.7 billion. The PE ratio is 33.96. 52-week low is $415.51, and the 52-week high is $638.25. So currently, we're very near that 52-week low. Free cash flow growth rate on average has been 6.33%, which I currently reflect in the valuation. Now, that might be incorrect because they have made a lot of acquisitions to try and address this poor free cash flow growth. And you're going to see free cash flow decrease with acquisitions because obviously that money is going into buying, new companies that could have a lot of growth for Adobe. Um, but as you can see from my current model with the figures I have in, the stock has a fair cost value of $280.53, and it trades at $419.58. I think that this growth rate is very, very, very conservative. I think on average, Adobe is going to be able to grow more than this. But let's kind of look at different pieces of, their income statement, balance sheet, and cash flows. So as you can see from here, total revenue has been increasing every year, which is good to see. And gross profit, for the most part, has also been increasing every year. So that's actually really good to see from Adobe. Some of the other parts, like the free cash flow, haven't been as good. And I think it's really good to see. And we can also see that, their total assets have also been increasing. Um, their total debt has been decreasing, which is good, and shares issued have been staying the same. They haven't really been buying back shares. I think maybe they should because they seem like more of a mature company. Um, and then I want to get into the weighted average cost of capital here. As you can see, they're only 2.16% debt finance versus 97.84% equity finance. When these numbers are all in thousands as well. And I got a weighted average cost of capital here of 7.62% for Adobe, and I think this is very fair for Adobe. Um, and so when we plug that into our discount rate here, that's 7.62 of our weighted average cost of capital into our discount rate for Adobe, and we have a perpetual growth rate of 2.5%. We like I showed you guys before, we have a fair cost of $280.53. Now, I was looking up some growth rates, and the range for analysts on Adobe is 10 to 20%. And at a 10%, there's a 13% downside. And at 20%, it's, obviously a huge buy. Now, I don't really agree with this necessarily because I don't think it's realistic for a mature company like Adobe to have this kind of free cash flow. I think you're putting a lot of weight on Adobe, and the only way I think you should be buying in is if you think that they can get 13% on average free cash flow growth over the next 9 years or greater. Because I think this stock is going to continue to drop personally. Um, I think they're very interesting because they have obviously Photoshop, PDF, a bunch of different things that are going to be worth something pretty much in perpetuity for as long as businesses want to use them. And as long as we're using computers, I think Adobe software is going to be the top pick because it's so ingrained in everything we do and it's been around for so long. Uh, but I think Adobe is one of those companies that's really struggled to find new vectors of growth. And while people can get really excited about it, unless you're heavily involved in this industry, I don't think you really know, and I don't think I really know. And I don't think I think it's more likely that they're going to continue to disappoint because I think the expectations for Adobe are just too high. And I don't think it's their fault. I think that they need to just make smart decisions despite what Wall Street wants and do the smartest thing for them to grow their free cash flow, even if it comes in with a few years of disappointment and a few years of Wall Street being angry. I do think it will materialize eventually. But I think this is maybe just complacency over the long term, or they were just developing, the PDF and improving their current products at a higher rate. And maybe that's where the issue was. But clearly, I think that this 13% free cash flow growth is too much on average for Adobe. I think it's going to be closer to maybe 10 or 7% because that's more in line with how it has been. But you basically need to have 13% or higher to justify the price of the stock because, and you could see it in the past performance. I mean, year over year, it's just dropped because they haven't been able to improve upon that free cash flow in the amount that Wall Street wants. And I think it's going to continue to drop. I really think that it's probably worth even lower than this. I would go 8%. I think that's not bad. I think 8% free cash flow growth is actually pretty impressive for the next 9 years for a company like Adobe. Um, and I really think that the stock is overvalued by about $100. That's kind of my unprofessional opinion on Adobe. I'm not trying to come at anyone who owns the stock right now or anything like that. Just from looking at Adobe, I don't see a way for them to increase the value of their shares unless they're buying these companies, but you don't immediately see that free cash flow growth. It can take 4 or 5 years for you to actually see it start affecting your business and to see that growth kind of materialize. And you could make acquisitions in this space that don't pan out at all. And that actually were a total waste of your free cash flow in the past that you could have been using to, buy back shares or do different things. So I think Adobe's under a lot of pressure right now. And I really don't like to see that for stocks that I own, especially when it deviates so far from my fair valuation that I can't justify buying it. And if you watch my channel, you'll know that I'm very, very, very strict on stocks and I'm not super optimistic. I think that gets people into a lot of trouble. And I don't think you can be super optimistic on Adobe. I think unless they surprise on the high end, that you should not be buying this stock. And you should just, if you really want to own this company because you really think that it's a strong foundational company and you like the product offerings, wait until the valuation lowers because it doesn't matter if you like, Coca-Cola or whatever different product. If the product, isn't making enough money and it costs too much relative to how much money it's generating, you shouldn't buy it. Um, and that's how I feel about Adobe. I think the valuation, $184 billion for something that has 6.5 billion yearly free cash flow in the last 12 months is not a good investment. It's 34 times earnings. Um, and I just don't think, and I don't think it's Adobe's fault either. I think they're doing their best. I just think that the expectations are way too high and you can't justify buying this. And that's my opinion. That's the video on Adobe. I hope you guys enjoyed it. I hope you guys enjoyed the rant. I will not be buying this stock. I was really excited. I wanted it to be a better value, but it just didn't materialize, and that happens sometimes. And yeah, I will not be pulling the trigger on this stock. Thank you guys for watching. Please subscribe to the channel if you like this rant. I appreciate you guys watching, and have a great day.